This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets, the earnings by technical analysis, and going over the VIX/volatility and what we are doing with our bear positions. And that is for August 7th, 2025. And with that said, let's go ahead and jump straight into the data. Let me get that pulled up. Now, today, August 6th, we did not have a whole lot of data, but we did have some interesting things happen. So, the few I almost just knocked my desk over. Besides that, the 10-year note auction came in at 1 p.m. and we saw the yields pull down like we expected. It pulled down to that 4.2%, which is very good. That's something we want to see from the economy. We want to be seeing the yields pull down. And this is also likely due to the Treasury action, where the Treasury is starting to push out more of these long-term yields, or long-term Treasury yields. So that is very likely helping pull these yields downward. Uh, with that said, tomorrow is the important day for the week. Other than yesterday's data on Tuesday. But tomorrow we have the jobless claims in the morning. That's going to be very key because the job market is extremely, extremely important for the overall narrative right now. Let's see, the non-farm productivity, they're expecting that to be a pretty large increase. Um, Even though the last rate was a negative 1.5%, they're expecting a 1.9% here, so that's a full 3.4% increase that they're anticipating. So that's pretty large. Unit labor costs, I don't really care about that one. Fed member Bostic speaks tomorrow at 10 a.m. That will be important. We had some very important news from the Fed today, which Fed member Daly was speaking, and they said that essentially we need to really get ready to start cutting rates. That we can't really just hold through this tariff process any longer. We can't just wait for something to break. So a lot of the Fed is really starting to lean towards this we need to cut rates now scenario. And we're starting to see that out of the Treasury market. We're starting to see these yields pull downward, and that's one of the main things you're starting to look for if we're expecting to get rate cuts is the yields to pull downward. We're seeing that across the board from the short end to the long end of the curve. So just be aware of that. But circling back to Bostic speaking at 10 a.m., it is very important to be listening to what all these Fed governors are saying right now. It's very, very key because there has been a lot of contention within the Fed. And because there's been a lot of contention within the Fed, there's the possibility that we may see the Fed try to outvote Powell to force a rate cut or something like that. I have no clue yet. It's interesting to, dive into. Now at 11 a.m., we have the New York Fed 1-year consumer inflation expectations. I don't really expect a whole lot of movement from the market out of that one. Now, if we get some absurd, like high or low reading, then obviously that can shift the market quite a bit. But I don't think that's going to be a major data set for tomorrow. Now, we do have the 30-year bond auction tomorrow at 1 p.m. Now, again, we've been seeing all the yields pulling downward. The expectation should be that the yield is going to come in lower. I don't know how much lower. I can't say it's going to be a whole 1 or 2% lower. We might see that pull down to maybe about 4.7, 4.75-ish, give or take. Which for me, that would be a huge victory for the yields. That's a great thing, as the further we can get away from the 5%, the better. And yeah, I do think we will see that pull down. I don't see why that would pull upward unless we just don't see buyers come to the auction at all and they have to force the yields up to get people to buy those treasuries, but that's not likely going to happen. Now, we also have the Atlanta Fed GDP that has been coming in lower and lower. We've been seeing the imports and export numbers coming in lower and lower, pretty much each time they're reporting. So we should expect that to come in lower as well. Let's see, consumer credit. That's going to be important, but that's basically already the end of the day, so that doesn't really matter. Um, if there is something major about that data print, then it will carry over to Thursday or to Friday. I mean, I apologize. But again, for tomorrow, really not a whole lot of super important data. We have to be aware of that 8:30 time slot. We have to be aware of the 10 a.m. just because we have a Fed member speaking. We have to be aware of the 11 a.m. and then we need to be aware of the 1 p.m. So nothing too market shifting, but there's enough here to push the market one way or the other. Now going over earnings. So in the morning we have Eli Lilly, we have Celsius, Q-Wave. Let's see what else. I don't think it was a very busy morning for earnings tomorrow morning. Now for the afternoon, we have Rocket Lab, we have Soundhound. Uh, we do have Sweet Green. I'm excited about that one. I know it's dipped a little bit, but that should recover in time with all the other food companies as well. What else is going on? Nothing super important. Now, we did have, again, we had AMD, SMCI. Those both did pretty poorly. In the after hours, let's take a look at Quantum. I know the after hours on SPY and QQQ so far are up. Let's see. Trying to think. Here's Ion Q in my list. Super blind. Okay, so they're down 5% in the after hours. So I'm assuming uh Quantum did not do very good. It really shouldn't. It's not a good industry. Um Oxy, that was another good one to play. I don't know if anybody played that. But yeah, tomorrow I'm looking forward to Sweet Green. Uh, Rocket Lab's a fun one to play. I know if you're looking for something that's fairly cheap that can run pretty hard, Rocket Labs had some success with that. I haven't personally traded it, but I've known many in the group to have, and many in the group have made, an absolute ton of money on it. So, uh, definitely ask them about it if you're interested. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into our technical analysis, as always, let's go ahead and open our daily time frame. Let's select our moving averages and Bollinger Band, and let's go over it. So today we had the market close above pretty much all of our levels. It closed at 632.78, which the 5 mile is currently at 629.14, which means the 5 mile will pull up tomorrow. It's not going to pull up a great deal, but it's going to pull up slightly. We should expect it to be around the 630, 50-ish range, give or take. I would write it down tomorrow because it's going to be very important. This whole range right now is a very contentious range, and I'll explain that in a couple minutes. Now, the upper bounds on the 5 mile is going to be essentially around that 632.50, 632.70-ish range, and the lower bounds is going to be around the 628 range. Give or take a little bit of cents here and there. Now, the 10 mile is slightly right above us. Well, no, technically we closed above it, but it's right next to us. It's at 632.39, so it is above the 5 mile, it is above the 20 mile. And the 20 mile is at 629.60, so that is slightly above the 5 mile as of right this moment, but the 5 mile will be above it again as of tomorrow. That does not mean we're kind of out of the woods yet. This can be a rejection bounce upward. We'll talk about it though, but the upper bounds of the 20 mile right now is very, very similar to the 5 mile. You can almost write both of them within the same range, but we have the upper bounds of the 20 mile being around the, I want to say the 631.80 range, and the lower bounds of the 20 mile being around the 627 30 area. So um, we're still very much just consolidating in this range right now. We have a lot of moving averages to test. We have a lot of different tests to actually go through, compact it all within a single area. So there's a lot of work to do in this range. Um, and let's just kind of go over that. So I've discussed this before how between each market move, generally you see the 5 mile tested. Okay. So we pulled down, we had that 20 mile test, and that was on Friday, if I remember correctly. I believe Friday, yes. And sorry, I'm getting a bunch of messages. Okay. Um, on Friday, we had the 20 mile test. And from there, we had 3 consolidation sessions, and we had the 5 mile tested both yesterday and today. And now we are seeing the 10 mile tested. Okay. Um, this doesn't mean it's a rejection. This doesn't mean it's a full test yet. I do expect this level to be tested a little further, but from here, we should see essentially the remainder of that 10 mod test, and then we should see the 5 mod tested again. Okay, generally that's how it's going to work. Now, just remember, this area is all pretty much right on top of each other. So tomorrow we're going to see the 5 mod a little bit above the 630 range, which essentially means that we're going to be testing the 10 mile, 5 mile, and 20 mile all at the same time. So just be aware of that. We're testing a ton of areas all at the same time. Now, this is neither bullish or bearish yet. Okay, this is just we're in, the in-between area right now. So what does that mean? If you're trading contracts, this means that you need to lean both ways. It doesn't matter if you're bullish or bearish. It means that we're in the center of the road. We have the bottom of the road down here at the lower Bollinger, the 619, basically the 620 range, and we have the upper Bollinger at the 640 range, essentially. So we're kind of smack in between these two. A little closer to the upside, but you want to be positioned for either one. Now, generally, you want to take contracts about 2 to 4 weeks out. I'm not going to really put a time frame on this. I would not suggest anything short duration at all. That's just asking for a disaster. This can consolidate for quite a bit. For example, if we're actually truly heading down, this can then test the 5 mile again. From that 5 mile test the 20 mile, and then we can see the market pull down below the 20 mile, retest the 5 mile, and then head down and head to that lower Bollinger. So we do have a lot of weaving in and out between the 5 mile and these other moving averages right now. Just be very, very aware that the upside is opening up, but so is the downside. Um, this is the type of movement to create a major move. So it's very just ideal to have some positioning for both sides. For example, I'm very, very bearish. I have a ton of bear equities, as everybody knows. Um, I do believe we will be getting a major sell-off very soon here. Now, with that said, that does not mean I am not taking calls. I have many calls, in fact. I've been taking ever since we hit below the 20 mile range. And I've been telling everybody that when you get to the the bottom bounds of the 20 ma, you take long calls, short puts. If you get to the upper range of the 20 ma, long puts, short calls. You get to the bottom range of the 5 ma, long calls, short puts. If you get to the upper range of the 5 ma, long puts, short calls. And you really need to just continue weaving those contracts in and out. Now, I know everybody can't do that, and it's not exactly the easiest thing to do, but that is how I trade my levels if I am using, specifically options. That way I don't get blown up. I'm looking to really stay fairly neutral. Even though I am bearish, I want to take premium no matter which way the market goes. I want premium whether it's heading upward or if it's heading downward. I'm going to find a way to extract premium, and using those type of option spreads is a very nice way to do it. Now, let's go over some structure because we've already gone over the moving averages and Bollinger Bands. Now, again, just on our daily time frame, I'm going to pull up the drawings. It's probably going to look like a mess for a moment. Not so bad. Okay, not so bad. Um, Again, I just want to keep everyone kind of in the same, frame of mind here. Okay, we have our cup. This is obviously an extremely, extremely, extremely bullish structure. Okay, we all know that. We all agree on that. Um, this is bullish, obviously. Now, at the top of a cup, we do expect some sort of bear structure to build a handle to continue heading upward in a major way. Now, that has not occurred yet. What we've been seeing has been essentially just super, super overextension into very, very long extended consolidation. Now, going through our actual just levels here, let's see what the market price is right now. It's at 633, so it's still within this liquidity range of this right shoulder. Okay, so this isn't out of play yet. This has not been invalidated yet. Same with this inverse cup and handle, that has not been invalidated yet as well. But we also need to be very aware that this can turn. Sorry, I'm losing my voice. I think I'm getting a cold or something. But this can turn very bullish very quickly. As I mentioned, we tested our 20 ma, we tested our 5 ma, we are now testing the 10 ma. We just need a single 5 ma test again, and then technically it's off to the races. We can head right back up, make this cup here, and from that cup, form a handle, and continue this push to the upper side of this major buying channel. Okay, and I know this is the news that nobody wants to hear right now besides the Bulls. I get it, but we need to be aware of that. We can't just make single directional bets and place all of our chips on one side. We have to assume that the market wants to continue upward. Okay, and if they do want to continue upward, well, we want to be able to profit on some of that, right? So, we're gonna play it smart. We're going to slowly add into our bear shares only when we reach the upper Bollinger. Okay, and let me turn off the drawings for a moment. But you only add into the bear shares when you reach the upper Bollinger. This isn't the time to be adding. This isn't the time to be really selling either. Um, if you did take some profit during that sell when we had that sell on Friday, which I did, I hope everyone did take a teeny bit of profit during that. Um, that was the opportunity, but it's not our opportunity yet. It's not our opportunity to buy in. It's not our opportunity to sell. We need to wait for that upper Bollinger again, or we need to wait for the structure to actually play out and give us our downside. Okay, we are still expecting downside and fully anticipating it. By multiple metrics. Okay, whether we leg up again and then continue down, that's totally possible, and we need to be prepared for that. Okay, um, I just can't explain that enough. Just be very, very prepared for that type of movement. because we're in a very, very difficult market right now, and that's a very high potential. And this is the 4-hour chart. You can go ahead and follow along on the hourly chart. I'll probably show better on your device. Now let me show the drawings again. Okay, so here's what we got going on, and don't worry about this pushing over this little bracket we have lined up right here. This is still very much within the within the liquidity range. Sorry, I'm really losing my voice lately. I need some water really quick. I would cut that out, but I have to keep my streams authentic. Okay, anyway, we have this nice little cup here. Okay, that is a bullish structure. There's no way around that. That is a bullish structure. Now, what needs to happen for the bulls to continue this bullish structure is a handle to continue upward. Okay, and that's a horrible arrow. Let's just do one of these. Essentially, they're going to build a handle and continue that cup all the way up to the 641. Okay, and from that 641, you will look for a handle to build more liquidity to continue heading upward. Okay, that's kind of the bull thesis here. And so far, bulls, you do have that building. You just need to make sure that this handle does not pull down below the cup. Okay, and that range is really going to be at that 628. Basically that 628.60 range. If you see the market selling below that, um, I would start cutting the bullish positions because that's kind of invalidating this smaller cup and handle, and that would be a risk at that point for me. Sorry, I'm losing my voice so bad here. Um, let's go ahead and delete some of this structure because I do want to kind of show the bearish side now. So bulls look for the continuation of the bullish structure. Okay, that's what you're looking for. Now bears, potentially we have some really nice liquidity for a head and shoulders here. Okay. Now what we need to do is we need to see the actual rejection in this range and to start seeing that right shoulder built out. Once we get that right shoulder built, we can continue downward and hopefully start pushing new lows. Start breaking into these lower liquidity channels that I have highlighted in these red gaps or in these red brackets. And then we would work on that level, then we'd work on that level, you know, so on and so forth. So that's what we're looking forward to right now, Bears. I know today did not go exactly as planned. I know that even myself, and many included, were expecting to push below the 20 mile range, push below the 5 mile range, hold a low for the day, and continue trying to push downward and seeing that trajectory moving, in a downward way, rather than continuing to see that upward liquidity taken. Now, again, we'll just quickly highlight it. You're either looking for the cup to continue outward and build out for the bullish side, or you're looking for the inverse cup, the head and shoulders, some some sort of bear structure to say that this larger inverse cup actually is real. And we know it's real because the bottom is very structured. Okay, the bottom is extremely structured on it. Um, there is a reason why they stopped at those 2 points. Okay. Um, so yeah, let's go with that. Uh, let's continue within this consolidation channel. This isn't the time to be loading up bear shares too much. Wait for the next upper Bollinger move if we're going to get it. If not, then you just need to be patient, allow this consolidation channel to continue building out, and let's wait for the structure to tell us whether we're actually going to continue upward or if we're going to continue pushing downward. So with that said, let's quickly cover the VIX. Now, the VIX had a pretty hard day today. Um, it was down a full 6%. We have not been seeing that curling structure yet at all. We did see a little bit of strength in here, basically at that lower or that upper 16 range. And if we see that strength continue over the next few sessions, then we can start looking for this cup to really start pulling upward. But so far, we do have bearish structure in here. We had this head and shoulders that did work out very well. It is creating more bearish liquidity downward. But again, we do need to continue looking for that cup. Okay, there's still plenty of room upward on that. Now, going over the actual VIX volatility, it pulled down massively today. However, it's still held an extremely key range. As long as it's above that 92 range, and that they're actively buying VIX options. And by VIX options, I mean, buying VIX calls. They're seeing more closure within the spreads, meaning they're seeing more volume, more IV picking up. So the VIX volatility has still been held very high. Okay. Um, some other instruments as well that I have been looking at, and I really think Bitcoin right now is one of the largest ones. And I've kind of gone over this multiple times why, but Bitcoin is pretty much an institutionally traded instrument right now. It's no longer that uh, you know, non-centralized token type thing. It's very much owned by, BlackRock, Vanguard, Citadel, State Street, all the top guys. They own pretty much the entirety of Bitcoin right now. So what my thesis behind Bitcoin is that it's kind of more of like the true heartbeat to the market. So when we were getting that major sell-off, or not the major sell-off, but um, when I was talking about how they were selling calls into the all-time highs and the buying was really tapering, we saw that all-time high at the same time SPY originally hit the 640. And then from Bitcoin side, we've only been seeing selling, 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 and then slowly starting to buy today. Now, the buying strength is not super strong yet. There is some buying structure in here, but not a whole lot yet. If we see continuation within Bitcoin, that's a very good indicator that we could see continuation within the market. Again, we see a lot of money shifting through Bitcoin, and I do believe it holds a lot truer of a value of what the actual kind of market would be trading at if it was not influenced by the speculative market or any sort of futures and contracts, all sorts of things. Bitcoin's just pretty much 24/7. It's alive in there. Um, Big funds have it. Big funds have algorithms attached to it, and they're going to continue slowly pumping money into it over time, and having it dip and buying dips and everything else. It's a very institutionalized instrument. So when we're seeing Bitcoin having strength, generally the market is going to follow. We saw that very well today. Bitcoin went from 112K last night all the way to 115 thousand today, and the market had a very good day following that. The day prior, we had Bitcoin go from 15,700 down to that 12K mark, or that 112K mark, and the market had that selling day. So you can really attribute a lot of market reaction straight to what Bitcoin is doing. Now, with that said, we do have the dollar pulling downward. Okay, the dollar has been really getting beaten down for a while, and generally I'm fine with that because a lower dollar is a good thing for the economy. It's a good thing for everybody, besides other, foreign countries. Now, currently, uh, we are seeing structure and we are seeing the dollar pull downward, which means that equities are usually going to see strength, that Bitcoin is usually going to see strength. Okay. If we start seeing the dollar pull back up, we do have a very nice cup and handle formed here. This can head back upward. If we do start heading back up to that $100 range, that's going to weigh on equities and treasuries and everything very, very heavily, especially Bitcoin as well. There used to be an actual direct inverse relationship between the dollar and Bitcoin where if the dollar was moving up, Bitcoin would move down. If the dollar was moving down, Bitcoin would move up. It still carries that a little bit, but not as much. Now that it is essentially entirely institutionally owned. So that is another signal I'm looking at. Are we going to continue seeing the dollar lose weight, or are we going to see it pick back up for a little bit? If we do see it picking up, that's a very good indicator that things are going to start turning bearish. Now, I do want to take a look at the HIG, which is the high yield corporate debt. If I can find it because I'm blind. One moment, everybody. There it is. All right. So I don't know what these are. But so far, we are looking for this head and shoulders to complete. Now, one thing I'm looking for in HIG is that generally HIG is a very early indicator to what is going to happen in the rest of the equity market. Um, Usually, if you start seeing major sells in HIG, that's telling you that the corporate debt market is struggling at the very, very top echelons, and that generally you can see equities following behind that. Now, we've been seeing some wonky days in the HIG. We've been seeing a lot of selling, and some of these candles shouldn't really be there. They're only single shares in the extended hours or overnight. Let's go ahead and take those out. Okay, that's more like it. Um, Now that we don't have all those wonky candles, we do have this very large inverse cup and handle here on the 30-minute chart. Um, I am looking for that to turn into a head and shoulders. Okay, that is still very much within the liquidity bounds of the head and shoulders. But if we do see this turn very bullish, if we do see this pull up to that 80-50 range and start pushing above that, that's telling you that the high yield debt market is very fine with the equity market moving upward. Now, if we do see this continue selling, then we will very, very, very likely see equities follow along within the following days. Okay, so that is another signal I am looking for. Again, generally selling within the HIG is a bearish sign. Now, it went from the upper Bollinger to the bottom Bollinger. It's kind of in that middle area. We will see over the next few days what happens to it, but it's going to be very key to be paying attention to. Let's see if there's anything else that I need to run past everybody. TLT. Let's see, hold on. T. So blind, I apologize. Okay, oh my, what do I got going on here? Hold on. Let me clear that, clear that. We're gonna clear drawings for a moment. Um, Bullish structure, I like that. I am very, very bullish on TLT right now. I truly think that um we're getting very, very close to seeing TLT have another run to the 100 range again. We're starting to mimic last summer quite a bit. And that's when we did have that major TLT pop. A lot of signals are just telling me that things are getting ready to really shift direction, even though it doesn't show so much within everything. But we've been seeing the gamma weights pull down. We've been seeing some shifts. We haven't been seeing the sell button pressed like we want, but um, I do think it is coming. I do think our thesis, excuse me, is reasonable still. So I will continue to be within bear equities, hedged on the upside and expecting downside. So, okay, that's my spiel for today. I hope everyone has a great day. Um, Tomorrow's video is probably going to be out probably later in the evening. Just because it's my wife's birthday tomorrow and we're going to go out and have dinner and whatnot. So, uh, I'll be posting the video probably way later in the evening. But other than that, have a safe trading day tomorrow. Have a great day. Don't blow your account, and let's make money together. Yeah, have a great day. I will talk to you all later.